Let's say that as a company, you were able to accumulate enough of a Bitcoin position, as an example, that the value of it actually exceeded the amount of capital that you had raised from investors previously. And even the Goldilocks scenarios, you'd built your business, you had more Bitcoin on your balance sheet in purchasing power terms than you had raised from investors previously. So actually, the amount of money that you had raised, you actually have more now. And then you had built a business that perhaps is profitable. I mean, that I think will be a completely mind shift in how you think about valuing a business.
Grant Gilliam, a seasoned voice in Bitcoin, has 2 decades of experience in the realm of private equity and venture capital. With a keen eye for identifying lucrative opportunities, Grant has honed his skills in sourcing, evaluating, executing, and managing investments. His expertise has earned him positions on the boards of reputable companies like Strike, StatMuse, and Samurai Wallet. Before his current endeavors, Grant made significant contributions at CVC Capital Partners, solidifying his reputation as a respected leader in the industry. Gilliam provides insights into the strategic thinking behind allocating resources between Bitcoin and traditional business initiatives, and paints us a picture of how all businesses will be transformed by the use of Bitcoin.
I think it's going to evolve gradually. We have this debate a lot with prospective investors, and it's a discussion topic for current investors about, can you outperform Bitcoin? Because the people who are considering investing in our fund oftentimes understand the tremendous upside potential that Bitcoin has in terms of purchasing power or price, however you want to call it. And so then they naturally ask, well, why should I invest with you guys instead of just holding Bitcoin, because Bitcoin's going to go up, enormous amounts. And then that raises the point about, well, can you outperform Bitcoin or can you not? And I think it pretty clearly the argument should be that you should, if you're taking on incremental risk, right? There's liquidity risk and execution risk. And then we think it's worthwhile to consider investing in the space. But that generally becomes the type of thought process that companies also go through. It's like, well, I could spend an incremental dollar on marketing, or I could buy Bitcoin, or I could, instead of burning cash, I could try to generate some incremental Bitcoin on my balance sheet rather than investing it in whatever initiative I think might be a good payout. I actually wrote a piece about this recently, just about Bitcoin treasury, mainly because the rationale for writing it was to express our evolution and what we've seen as companies' thought processes around like having Bitcoin in their treasury, especially because you're a Bitcoiner. Like Bitcoin companies are run typically by Bitcoiners who want as much Bitcoin as they can possibly get their hands on, but not many of them are holding that much Bitcoin on their balance sheet. And typically when we've invested in companies, even in 2020 and 2021, we were advising companies, well, hey, you should consider using some of the money to put some Bitcoin on your balance sheet. One of the obvious reasons is, well, you're already effectively long Bitcoin just by operating this market. So why not have that type of exposure on your balance sheet as well? But it, inherently, because of volatility, that's a risky proposition for a company, most of them who are burning cash. You typically, as an early stage venture-backed company, you're raising some money for a period of time, a year, 2 years, depends on what you're trying to do and what milestones you're trying to hit and what you're trying to build. But typically it's in that time zone. And then if you were to put a significant amount of that in Bitcoin and there's some volatility, well, all of a sudden your runway could get cut significantly. So that's risky. So what we would usually say is make sure you have at least 2 years worth of cash on your balance sheet. And then if you have some incremental from there, yeah, maybe it makes sense to buy some Bitcoin. Then obviously about a year ago, right, we saw SVB and other banking failures, and all of a sudden we were on the phone 24/7 with the companies that one weekend, saying like, "Where's your cash? And do you have access to it? Can you make payroll the next week?" It was a hodgepodge. There were some companies that had local relationships with credit unions. There were some that had SVB. There were some that had some of the other crypto banks that ultimately failed later. We had this discussion. We do a portfolio retreat for all the companies every year. We've done it twice now. And this last year in October, one of the big discussion topics we had was banking relationships and just infrastructure for both banking and Bitcoin, and how can companies navigate what's ultimately a very challenging banking environment and share best practices for what's worked for them, and which banks are more open for business for the Bitcoin companies. Well, you should maybe consider having some Bitcoin beyond just your cash reserves to an additional layer, which is you should have a minimum of 2 to 3 months of reserves in Bitcoin, just in case you can't get access to your dollars. And then the more recent one, which I've been thinking about, is, okay, if you can meet those, which call that the holding 2 to 3 months of Bitcoin as sort of your near-term working capital needs, is just in case something happens, and then 1 to 2 years, or let's call it 2 years of runway in cash, which you could decide maybe you don't do it just cash, maybe it's a mix of cash and Bitcoin. In which case, my argument would be we should probably have a bit more than 2 years. Maybe you have 3 years if it's a mixture of cash and Bitcoin, but call that your medium-term reserves. The longer term, if you've met both of those two, maybe there's a line of thinking that says, well, you should have a percentage of your equity value in your business in Bitcoin. And maybe that can become this incremental way to benefit from the long-term appreciation that we all expect of Bitcoin, because you can look at any longer-term hold period of Bitcoin, and it's going up significantly, right? Like, we did a look back on every 4-year holding period since the 2012 halving. This is one of the companies that we're backing did this analysis and suggested that on average, over every possible 4-year hold, Bitcoin's up since 2012, is up 100% a year. And the 95th percentile, so at the top end, you're up 165% a year. And the absolute lowest performance that you would have done is 25% a year. So if you have the capability to hold Bitcoin on your balance sheet and do it for a long period of time, where you can hold it for at least 4 years, then we should expect there to be long-term appreciation in your balance sheet. Now, why might that be interesting? Well, for one, that might be interesting because you could extend your runway, for example, and prevent having to raise money again, or future dilution. Perhaps it's a way to increase like the ability to compete against an incumbent. Say you're this tech company that is emerging in the Bitcoin space, but you're going after the incumbent financial players, and those companies have not yet caught on to Bitcoin. They haven't started accumulating it. Hardly any companies do. And you can establish a major Bitcoin position on your balance sheet relative to them who might come in later. Now, all of a sudden, David versus Goliath, you have a much better chance, because in the future, you're going to be much better capitalized.
Today's video is sponsored by Stampseed. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stampseed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. Welcome to Bit Intelligence. We are committed to bringing you top-notch Bitcoin-only content, twice weekly. Doing this is quite a lot of work. If you are enjoying it and you'd like to support us in making more of these videos, subscribe to our channel and hit that bell icon. If you are willing to go a step further, consider contributing to our Lightning wallet on Geyser to help us get the funding we need to keep bringing you these videos. You can also join our channel here on YouTube for as low as $2.99 per month. Okay, back to the video.
What would be the arguments against it? Well, some people might say, well, if you're just allocating, like say you decide to, if you're going to raise a certain amount of money and you top up the amount you're going to raise just to buy Bitcoin, well, does that mean that, well, you're sort of admitting that like maybe you can't outperform Bitcoin with the equity value of your company, or you don't have better ways to deploy capital into your business than just buying Bitcoin? Or might the investors in your business just prefer to have that excess cash distributed to them and they can decide if they want to buy Bitcoin themselves, rather than you just start to speculate on your balance sheet? I mean, I'm definitely not arguing that a balance sheet should just become a speculation on the price of Bitcoin. All right, let's say that as a company, you were able to accumulate enough of a Bitcoin position, as an example, that the value of it actually exceeded the amount of capital that you had raised from investors previously. And even the Goldilocks scenarios, you'd built your business, you had more Bitcoin on your balance sheet in purchasing power terms than you had raised from investors previously. So actually, the amount of money that you had raised, you actually have more now. And then you had built a business that perhaps is profitable. I mean, that I think will be a completely mind shift in how you think about valuing a business. I was thinking about it more because of the evolution of our thinking, right? We were telling people, well, you should consider having some Bitcoin for the medium term. And then we were telling people, well, actually, you should definitely have some for the near term. Who knows what's going to happen now? And then it was more, okay, actually, maybe there's more to it. Maybe there's, as these companies are growing, maybe there's a much longer term approach to trying to have a Bitcoin position, and then all of a sudden you don't ever have to worry about capital again. So I don't think it's something that many of the companies are thinking about right now. In fact, I mean, in the paper, I say that ironically, most Bitcoin companies don't hold that much Bitcoin. I mean, when we went through our discussion at the portfolio retreat, most of the companies, it doesn't really matter if they're US versus international, but let's just use the US companies, for example. Most of them are still reliant and trying to navigate this, landmine of a backdrop for banking. And there's only a couple of them that you can point to and say, well, actually, they're just operating completely on a Bitcoin standard. And at the very end, we're having this discussion and someone raises their hand and is like, well, I encourage you all to shift to a Bitcoin standard because I haven't had to deal with any of these issues and things are going just well for us. So, but that's the exception right now.
Grant's reflections offer a compelling narrative on the evolving dynamics of corporate treasury management in the age of Bitcoin. His nuanced approach, balancing the allure of Bitcoin gains with the pragmatic realities of business operations, underscores the ongoing transformation within both startups and established companies. As the Bitcoin industry continues to mature, Gilliam's insights serve as a beacon for navigating the complexities of wealth preservation and strategic growth in an increasingly digital world. Thanks for tuning into our channel today. If you want to watch another video about why Bitcoin adoption is unstoppable, watch this one here. We'll see you next time.